Hello and welcome to today's news update. Today we have two stories from the world of finance. First up, Silicon Valley Bank, a US-based lender, has been bought by rival First Citizens Bank shares after it collapsed earlier this month. The failure of SVB, along with another US lender, Signature Bank, caused concern over the stability of the banking sector, leading to turmoil in banking shares. In Europe, the strength of Swiss banking giant Credit Suisse has also caused concern and led to a rush takeover by rival UBS. Under the takeover deal, all 17 former SVB branches will open under the First Citizens brand on Monday. First Citizens, based in North Carolina, is America's biggest family-controlled bank and has been one of the largest buyers of troubled banks in recent years. The Federal Deposit Insurance Corp., the U.S. financial regulator that announced the deal, said First Citizens had bought around $72 billion of SVB's assets at a discount of $16.5 billion, a deal that will make the bank one of the 25 biggest in the U.S. The FDIC estimates that the cost of the SVB's failure to its deposit insurance fund will be about $20 billion. In the UK, the arm of SVB was bought by HSBC earlier this month for just £1. Moving on to our second story, concerns have been raised over the banking sector as interest rates rise. Interest rates were cut sharply during the 2008 global financial crisis and again during the COVID pandemic to encourage economic growth. However, rates have been rising over the past year as central banks try to rein in soaring prices. These rate rises have hit the value of investments that banks keep some of their money in, and contributed to the bank failures in the U.S. The worry that has unnerved financial markets is that there could be other problems in the banking sector, which have not yet emerged. Central banks around the world have stressed that the banking system is safe and lenders are well capitalized. However, Sarah Hewen, head of Europe and America's research at Standard Chartered Bank, told the BBC's Today program that there is a very febrile environment among investors. At the moment there's a lot of psychology rather than the reality which is running markets. On Sunday, the head of the International Monetary Fund, Kristalina Georgieva, said there was a need for vigilance given the turbulence in the banking sector and warned it was need for vigilance. Some text goes here. At a time of higher debt levels, the rapid transition from a prolonged period of low interest rates to much higher rates inevitably generates stresses and vulnerabilities. That's all for today's update. We'll be sure to keep you updated on any developments in these stories and others in the world of finance. Thank you for listening.